Yo, 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 what's up, amigos? I hope you guys been well. I hope life is good. Trading's been well. Uh, I know trading has not been the easiest for the past 6 months or so, but uh, I hope you guys been recapping. It's been a while, and I've been meaning to make videos, but I don't know what kind of videos would benefit you guys, and one of my fear is committing to something and not being able to fulfill through it. So it's been kind of tough in that sense. I don't want to commit to saying I'm going to make videos consistently. But in a perfect world, I would love to make I think a podcast with the guys from the prop firm or some close friends that I trade with on a daily basis. Just come and doesn't have to be edited, doesn't have to be uh, super structured. But that stuff aside, in this video, what we're going to talk about is some of the trades that's that was green, but I think it was a bad way. It's like a green trade, but it's a bad trade. And other aspects is just my recaps today, and then FNGR is I was looking for a long. I had a high conviction long, and that worked out. Even though I didn't catch the full move, and my but my thesis was correct. So uh, I did my recap, and but I'm gonna go over in the video to see how I can essentially improve myself the next time. So the overall summary is basically how to recap properly. A green trade, a green trade doesn't mean that it's a good trade, and then how do just be better. Getting straight into it, I actually wanted to start the video. It was gonna be about SPY. So I've been trading SPY consistently for the past. This is how I recap. You guys can pause, take a look. I have done this many times. I do this every single day, and I've been trading for, I would say, 12 to 14 years. I struggled a lot in the first few. So this was a green trade and SPY, but the way I traded it was not correct. Originally, so what's the setup? What's the play? At 3:45 p.m., usually there's a fund according to my own hypothesis and thesis and assumptions. I think where they come in and they take an overnight position because a lot of these whoever's trading the big market in a big way, or if they have a position they have to work with core, they don't like the overnight risk. So I think somebody comes in or somebody just comes in at the last 15 minutes, takes a position. You could see them into the tape. It's been like that for the past month or two. So often, if it's an extension, they take the opposite stake and then pre-market or at the open they sell the position, and that's when you can see this the market's at the lows and 15 minutes somebody comes in buys the next day it's a bit higher, all that jazz. So in here, these are some really basic rules. Um, so I took the initial short with the button. One hot. We have a button just like you press it and it gives you 1 hour risk. You put a stop and a position size. So I was risking above the highs, and the idea was that it's close to 3:45 p.m. and it's made a kind of a lower low. If it works out, the idea was that it would go maybe test the previous highs up here, and it would give you like a 5-to-1 or 6-to-1 kind of trade. So one thing that I'm consistently doing that I've noticed, you guys don't know this, but because I recap often every day, is sometimes I hit a ticker max loss really soon. And it's because of this conviction, because I think, hey, 3:45 p.m., like the logic and things make sense and conviction is there. The overall, the play is good too, because I think it has, I looked at historically, I think the profit factor for me was like 2.4 on SPY QQQ at the late day place. But what's been happening is I get stubborn, I add to loser, and I know it's going to work out. It'll make it work. So I added to loser position here. In other times when I add and I don't obey, I always have a risk now. Like when I press the hot button, it puts an automatic hard stop. But adding to loser is a bad concept. The correct play should have been to wait until it's lower and then add here, the last row down there. So this trade is a green trade, but overall for the past 3-4 times that I've noticed, this actually becomes a ticker max loss, which is like I have to be wrong in the name about 4 times. Often it's 3, but I fluctuate the risk based on my performance the past few weeks. So this is something I need to stop. And one rule I have is I'm really good at quote unquote adding to winners and being aggressive. So I need to make a rule where or be an open mind that to only add once it's below my average if I'm shorting. So I need to establish that kind of situation here. But in here, this was like a 2-3 hour trade. Regardless, it's bad, this behavior of adding to loser. I wrote the setup name and things, and yeah. The other thing I covered as it broke the lows, and I felt somebody's soaking, so it broke it, didn't panic, reclaimed. I covered, no regrets, because if it was gonna wash, if it was gonna be a big wash, it would have like panicked wash and a lot of volume came in, so no regrets there. So that's the SPY overall. I have to be mindful not to add to a losing position, and sometimes there's the fact that the stop is wide, it causes me some psychological issues where I'm like now I have some things quote unquote relatively automated. I have a wide stop, and then I don't have to think about position sizing, all that. I just press it once, okay. It's set up to be like 0.5 hour, so I'm one click, so it clicks, and then as I see the tape stall, I click. So that brings a false sense of security. It's powerful, but it's powerful only when adding to winner. So in this situation, it worked out, but I think I need to remove that. The other thing that we can talk about, the other 2 good trades I think were FNGR or sober. Let's talk about FNGR first. I like the sober trade better. So in here, the thesis here for me for the long was the same thing. If you guys go back, look at my videos, it's float rotation, not much dilution, and it's, I could see a lot of shorts getting involved here below VWAP. So I took a starter. When I took the starter, I had that 1 hour button, the risk is below this consolidation. It goes above, and I'm like, it's not really working well. The other thing I needed to see big relative volume come in. So I added once, and then I saw it hold above VWAP. I added twice. I reduced the risk to down here, and then right as it halted up and then had another push up, I saw stall tape, took off 2/3, added onto the dip. So here, the concept here is, first I distinguished that this is going to be a long, and then I had a really high conviction that this was going to hit 750 or higher, but I was open-minded that I was like, you know what, I might be wrong. But what I did here again use the 1RR button. So when I was adding these, I actually had my risk was off of like 512 at the start. And this, I'm using the same thing, the 1RR hop button. And I'll make it so that like if you guys want that, I will happily send it. It's like a custom thing that I didn't make it, but like I guided a friend to walk through it, and then we make it. So this was really cool. Adding to winner, having a wide stop. So this is basically tier 1. I had relatively tier 2 here, and then again, because it broke the lower low and it reclaimed, and I was like, okay, I don't like that. I took off 2/3 and then I just re-added it. And sadly, in here I had tier 3. My risk was below this. But I cut it out. Why? Yeah, I didn't feel comfortable because I thought in this situation that it's holding it's holding the previous high, but the idea was that it was going to break the high of the day and this recent high and go super parabolic. It should have, in theory. And it wasn't doing that, so it was just consolidating for way too long, for an hour or so. So I took it off, and then I realized I re-added it, and put it back up, and then I wanted to be in when the big spike comes in, and this was heavy. I sold all of it, and this doesn't look like a big wash, but this was actually a really strong wash. This here was a really big wash for that time period. But in here, so how can I play this better? The next time that I'm gonna trade this, so 12 minutes. One thing about short squeeze is very low chance that it breaks the lower low. Sometimes when it breaks the lower low, it reclaims. That's a trap, obviously, as you can see that so it stop hunted the longs and then it went higher. But so if I were to trade this again at tier 2, tier 3, have a wide stop, and then try to buy, as you see the tape on the washes, the tape slows down, the price action slows down. So these were really good entries. Even these ones, I really like these entries. This was in my head, it was a good chance that it was going to go rip up new high 750, and this would have been like I don't even know, like 20R trade. If I held to this one, it would have been 20R because my risk was super low and I was like tier 3. So basically, risk the lower, so you don't want to risk this low. This is the other thing that I've learned in the past. If you're longing, you don't want to risk the previous dip. You want to risk the dip before. So the risk should be off of here. So the next few times that I add a hard stop. And the sad part is, I don't want to say this, but sometimes you can see the stop, but you shouldn't let that deter you from using hard stops. So that's the setup for the FNGR. Shorts are in pain. You need to be adding, and if it works out, it goes super parabolic. It gives you realistically like crazy return. 10 to R is on the lower end, maybe 50 or something. It gives it to you. The other, if you guys made this far, this is actually, I'm kind of proud of myself on this trade, and it doesn't have to do with the dollar at all. It has to do with the discipline between an A setup and an A++. So in here, I saw some pivot levels, and I thought, oh, maybe it's capitulation volume. I was adding, so I shorted here. My risk was 3. Let me see. I think my risk was like 388, so I'm down here. But I realized that this is a B setup. So in a B setup, you don't want to have a lot of risk, so it's very small. And then as it worked, I was like, okay, just cover, scalp, if it's gonna go, go. So this was what I'm proud of. To put a quick summary out of it is that I was able to distinguish between an A++, and then when I realized now this becomes an A++, is I increase the risk. As Lance says that we need to bet exponentially, and for you to do that, you have to recap, you have to write down what has been working, what hasn't been working, all that. And like, what's an A setup for you versus an A++? So these trades are the same, but at different situations, they have different risk rewards. So this, the fact that there was no daily setup on this and it's a midday runner, automatically a B. The fact that there was no risk to the left, this actually, if anything, was a C trade. Because this is a very stupid trade. Because the first dip is always bought by the longs. And then the capitulation volume, I don't know, we could argue that it's like 3 times the volume, but it needs to be 3 times, so I don't know if that was that. But I was aware of all of these things, so what I did is I just, it was just a quick scalp play, and if it was going to set up a lower high, then I would cut. So I covered, shorted some more, still probably risking like less than 1 R. I cut it here, I cut half here, and then I washed, covered all, short, covered, and then here, again, I'm using the same 1 R button, so I'm like, you know what, I'm going to stop out right before the low in case it skips up. I'm going to stop, and then because of this hard stop, so in here I'm probably small green, or break even because I lost in some profits. The best part here is that break even stop, like not break even, like I had a hard stop with the 1 R button, and in here I distinguished as it was about to go. I was running different scenarios. What if this happens, then this. So I was like, what if it breaks the highs and then it rejects? If that happens, then all of a sudden this goes from a B to an A. What would have made it an A++? These are notes that you guys should take. I mean that in a way that you need to make notes on these kind of variables where it's like, how does it go from being an A to an A++? And then you should risk like 3 times, 5 times more. So if this was near the end of the day, if it was 2 p.m. and it did a liquidity event, which is breaks the highs, rejects, and it had a higher volume, then it would have been an A++. But this was an A, regardless. Down here was a C. C, B, close. This was an A. It broke the highs, rejected, and the key is not to anticipate the rejection. And this is why I'm kind of proud of myself, because I've been practicing that,